Beginner's Guide to Hard Money. Before we get into the nitty gritty, as they say, there are a couple of things that our lawyers want to express with you, and that's investment risk and our disclaimer. As I kill my microphone here. So these next two slides are what our legal team wants us to remind you, that all investments carry risk, and we're not advertising you on which or advising you on which investments to participate in. And my son's looking at me right there. Come here. Hang on one second. Yes, sir. I'm in the middle of this. What do you need? Yes.
This is Jay being very patient right now.
Yes, it is. Yes. I've been advertising for at least the last hour. Hey, I've got this presentation I've got to give at 11:30. 5 minutes into it. Here we go. All right. So investment risk, all investment carry risk. We're not advising you which ones to participate in, meaning we are not CPAs and we're not certified financial planners. I have a couple I can recommend to you. If you need one, here's another one. You guys can take screenshots of this and read it later if you want to. But that's what those are. So we're here to talk about hard money. But in case we haven't met, I want to make sure you know who the players are. And in case you haven't met me or we haven't discussed or chatted, my name is Jay Helms. The most interesting thing about me is how I met my wife. We actually met as contestants on a reality TV show, and since then we have produced 3 little munchkins, which you guys just saw the oldest, and she made me a husband, a father, also founder of the W2 Capitalist, which has now morphed into several different things, which including W2 Cap Capital. So I am also a former W2 employee of 20 years, used to work with Mr. Grady Powell here, who's in chat as well. And we had some good times together. But anyway, Cody Fisher is my other partner in this, as well as Gway Smith. Cody, I'd like to turn it over to you. Give people a little quick intro about yourself.
Yeah. Hey, how's it going, everybody? So like it shows in the picture there, my family and I, we're actually full-time RVers. And I normally on Zoom and things like that, I've got the background blurred, but it's not here. So we're getting kind of the full effect from inside the RV here. So have been a commercial mortgage broker for the last 4 years. And then, yeah, Jay and Gwaith and I partnered up to start W2 Cap Capital last year. And yeah, looking forward to chatting with everybody today.
Mr. Smith, can you echo in some? There you go.
There we go. If you all can hear my echo, I apologize, but Gwait Smith, I was hoping to be able to say that I am the longest standing member of the W2 Capitalists in this room right now, but unfortunately, Jamie O'Brien decided to come as well, so there's going to be a little bit of a disagreement there. But yeah, Jay didn't ask me for a picture, so I'm not sure where he found that. But you know, married with 4 kids, all boys, and been doing full-time real estate for about 1.5 years now. Prior to that, I was in allied health as a prosthetist, making artificial limbs with people with limb loss. Have a history of private lending on my own, but have obviously taken that to another level with systematizations and implementation of platforms and structure with W2 Cap Capital.
Thank you, sir. And I'm getting a little bit of feedback from somebody, and I don't know who that is. So if everybody can go on mute, I would appreciate that very much. I'm trying to figure out who that is. And Scott, it might be you. For some reason, I can't mute your microphone. But anyway, we're going to continue on. So we're here today to talk about hard money. Actually, what is hard money? In very simplistic definition, hard money refers to a type of financing that's typically used by investors who need quick access to capital or who may not qualify for traditional bank loans. We're going to get into a little bit more about that. We're going to get into who our lenders are. Cody, you want to talk about who our lenders are on the back end?
Yeah, absolutely. Yeah, so we work exclusively with private lenders and a combination of our own capital also. So it's all private capital, you know, that we're doing these deals with.
All right. I'm sorry, that little background noise, if anybody else can hear it, it's just throwing me off. So let's talk about how hard money, we're going to talk about how hard money is different than traditional lending. I'll give you kind of the highlights. It is short term, right? Hard money loans are usually used from 6 to 9 months to get your project started, get it going, and get it completed. We're talking about flips and burrs. It's a little bit different than traditional lending. I got a whole spreadsheet we're going to go through here in a minute. Also has higher interest rates. I'm going to show you why that's not very important here in just a minute. And then we're going to talk about why is hard money attractive. And the other thing is we're going to talk about why hard money looks ugly. Not that it is ugly, but why it looks ugly. So we're going to get into that here in just a second as well. So let's first look at one of the things about hard money loans is the amount of documentation that you do not have to use when it comes to using a hard money lender. So I want to do a comparison or show you guys a comparison of traditional financing versus hard money financing. Before I do that, Scott, can you hear me okay?
Yeah, I can hear you. Can you hear me? Because I'm trying to figure out how to mute my mic, and I can't find it.
There should be a microphone button toward the very bottom of your screen. It looks like a little microphone. Oh, there you go. All right, perfect. Now, thank you guys for that. So let's look at the amount of documentation that are required between the different traditional lending and hard money loans. I'm going to go through this real quick. Very first one is probably one of the most important if you're concerned about your credit and your credit rating. With hard money loans, traditionally, only a soft credit pull is going to happen, right? And with traditional lending, obviously, hard money or hard credit pull is going to happen. The other thing that where these guys are similar, right, is you're going to have to traditionally provide your resume and track record, personal financial statement, entity docs, and a project scope of work. Where traditional lending is different than hard money lending, they're going to go a little bit further, right? They're going to ask you for 3 years of tax returns. They're going to want to see your W-2 pay stubs. They're going to want to see additional bank statements. Depending on what's on those bank statements, they may require additional items from you. And then they're just going to give you endless questions from these quote unquote underwriters that you're never allowed to talk to. I often question, are these people real? Right? If you're married, one of the things that we will ask you to do, or most hard money lenders should ask you to do, just like traditional banks, and I accidentally let this off, is you'll have to have your spouse sign a consent form saying, yep, I know he's buying this property. I know he's getting this mortgage on this property. So that's the only thing that's kind of missing from this slide. Cody, Gwaith, you guys jump in if there's anything that you want to talk about. Like Cody, can you cover this slide for us?
Yeah, absolutely. Yeah, so talking a little bit about, instances where hard money loans can be useful and can be attractive. Any deals that need to be closed really, really quickly. Any deals that are just a little bit outside of the norm. That don't quite fit into kind of the traditional boxes that that lenders like for them, that traditional lenders like for them to fit into. One of my favorites to point out is in any deals where there is some equity in the property due to rehab and improvements that need to be made to the property. That you want to try to essentially unlock earlier on in the process rather than waiting a couple of years or 3 years down the road to be able to kind of access that. So just kind of in general, those are some things that make hard money lending more attractive.
Yeah, with traditional lending, it is very rare, at least in my exposure and working with traditional banks for the last, 10 years or so, maybe almost 20 years, actually. That's kind of scary to think about. Is they potentially go on as is value. I don't, maybe I haven't shopped around enough with traditional lenders but it's very difficult for them. They have a very specific box, and they look at it as his values of the property as it sits today, not willing to understand that, oh, you're going to come in, you're going to rehab it, it's going to be worth, X amount of dollars, so we should be able to loan up to a certain percentage. The other thing I want to point out on this slide is, we talk about speed with hard money loans, fast approval, fast funding. One of the things that we try to do is we try to get you approved within 24 to 48 hour business hours, just enough time for us to look at you and look at the deal you're looking at. With us, the typically hold up for closing is with title. What I mean by that is, I had a lady message me yesterday. Yeah, yesterday was Monday. Yesterday, she messaged me. She goes, "Hey, I got this property under contract. Can you close on it next week, like next Monday?" And I was like, potentially. Where are you with title? And she said, "Well, I just reached out to them today." I was like, okay, probably not. Probably not going to be able to do that, but we're typically ready to go in about 14 days. And as you can see on this slide, these are all real deals that we have funded. Half of these, top left and the bottom right-hand corner, have went full cycle, meaning they refinanced through a BRRRR, or I think both of those actually sold on the MLS. So those have been full cycle. The other two are still in our projects that are in motion. But you can see where our average close day on the bottom two is 13, 14 days. The top two, where it says 6 days and 8 days, with these two, what had happened was the borrower had another lender lined up, had done all the title work, got to, a week or so before closing, and then the lender said, "Hey, we're not going to be able to fund your transaction, so we're going to be able to step in and help those folks close it." And while we have done some 100%, up to 100% of the purchase price in the past, and up to 100% of the repair, you can see some of those right there as examples. Our now more popular product or program is with a 90% purchase price, with a, you bring in 10% down payment. So let's talk about why hard money loans appear to be ugly, right? I want to tell you guys a quick story. I am trying to follow Cody's family in being a full-time RVer. Now we're somewhat nomadic, but we do it a little different. And I want to get back. There's a whole nother story about us not having had an RV. Now we don't. Trying to get back into it. And I was talking to my parents about this, and they're like, "Jay, do you not realize how expensive gas is for an RV?" And so that prompted me to create this spreadsheet for my parents that showed, okay, here's what we spend on the way now that we're doing, now the way we're traveling. Here's how much money we will save if we buy an RV and we afford that $6 or 6 miles per gallon that the RV is going to cost us. So here's why I tell you that to say this: my parents were focused on one element of the entire picture, right? And most people do that with hard money loans as well. They look at, man, there's higher origination, there's higher interest rates. And then, there's only a short-term loan. Like, you got to be able to get your project done within 6 to 9 months, right? That is traditionally why they appear ugly. And I'll touch on the last one there, and we'll get into why the higher origination, the higher interest rates really don't matter here. They matter. Why that is a better deal for you anyway. But when we talk about the short-term loans, right? A lot of hard money lenders, while there is an initial term for 6 to 9 months, they typically offer an extension, right? Or they should be able to offer an extension. You have to work with your hard money lender to figure out what those are, but it's not like if you don't pay Uncle Guido here in 6 months, he's going to come after your kneecaps. That's not what happens. And I've heard that from folks. So that's not it. So, and one of the things I will tell you myself is a lot of the negative talk about hard money loans comes from folks who have never used hard money loans. So they kind of see the higher interest rate and the fees, and they focus on those two and not the end result, which I'm going to show you here in just a second. The other thing I want to talk about real quick is myths about hard money loans, because this is more of an FAQ that we get a lot. The first one is that the borrower receives all the money at the initial close. And what I mean by that is, we fund 100% of the purchase price. We fund 100% of the rehab. Obviously, we're wiring the money to title to purchase the property, but we've run into scenarios multiple times where we get to closing and the borrower is expecting a big check for the rehab, and that's not the case. Right now, there are lenders out there who will allow you to take all those monies. We see that as a risk to our lenders and to our business, so we just don't do it, because there are horror stories out there where a borrower, I'm not saying any of you would do this, but there's borrowers out there who would come get the money for the rehab and just say the heck with the property, right? They just got a check for, like, for example, in these scenarios here, they got a check for what was that, $40,000 or $50,000 or $80,000, and they just took off to Vegas with it, or did whatever. They took off to the Caribbean and had no intentions of ever doing anything with the property. So horror stories out there. We try to protect our lenders by not issuing a refund, rehab funds at the initial close, but they come out on a draw, right? The second myth I want to talk about is hard money loans are always a bad idea. I had this mentality up until I started working with Gwaith and Cody and doing some loans myself. No, they're actually a really good idea in a lot of cases. And I'm going to show you a very specific example here in just a second on why that is. Also, hard money loans are only for people who have bad credit. No, that is not the case at all. Matter of fact, we have our minimum credit score as well. I don't even know if that's bad credit. Cody, Gwaith, what's the worst credit score that we've seen come in that we actually loaned on a deal? Do you remember?
Little under 600, I think, 580 or so.
Okay.
Yeah, I think around there.
Yeah.
So most of our borrowers who are coming in have really good credit scores, really good W-2s, because they tell us, not because we ask for proof of that. And then they don't want to use their own money, or they don't have the entire amount to fund their project. Right. So hard money loans are not just for people who have bad credit. So I want to show you this real quick, just as some of the programs that we adhere to, our guidelines, our lending guidelines that we do for our hard money loans. And as you talk to other hard money lenders, they're going to have their own set of guidelines. And as you can see, a lot of these are very similar. The biggest thing is, I want to point out, is being capped at 70% of the ARV, the after repair value. This is where Cody was talking about, as we see what you're going to do, what the finished product is going to look like, we can loan up to 70% of that after repair value. I think, Cody, you talked about untapped equity or untapped potential that most traditional banks are not going to be able to see, because it's not in their little box. But these are our typical programs or products that we offer. And as the market shifts and whatnot, so will our programs, right? These are designed to help borrowers, but also help protect our lenders from that. Let's see. Next. Okay. Sample loan. So this is one of the ones I showed you earlier. Product number 2, this is a real life scenario, right, where we funded 90% of the purchase price, 100% of the rehab. It was capped at 70% of the after repair value. The borrower paid a 3% origination fees, and he had 12% interest only payments for the life of the term. I think it was like 6 to 9 months. So here's what that means, right? So for this borrower to come to close, they had to fund 10% of the purchase price. So they had a $17,100 down payment. 3% origination fee is $6,630. And then we have some fees. We have appraisal fee, a legal fee, and a processing fee. That's the only fees that we hire or have. And those came out to $2,250. Now, they're also, the asterisk is right there on the bottom of fees, because depending on what title company you choose to close, they're going to have their own closing fees, and they vary wildly. They vary. They vary. So we just left those off because those are going to just vary so much. So what I want to do now, I want to kind of give you this mental picture, right? You guys look at this, and then let's compare what this is going to look like if you went the traditional route, right? And Cody, you asked me to put this in here, so I'm going to tap on your shoulder and ask you to kind of go through this.
Yeah, no, absolutely. So yeah, so with most traditional lenders, you're going to be looking at 20% down on the purchase price. If it's a long-term loan, that you're buying it on, just right out of the gate. In most cases, they're not going to finance the rehab for you. So you're essentially doing that out of pocket. And then traditional lenders typically charge an origination fee somewhere in the 0.5% to 1% range. And then most kind of the last line item there, most want anywhere from 6 to 12 months of interest reserves. I haven't seen lenders ask for 12 months in a little while now, but 6 is still pretty common. So just in general, with like Jay mentioned earlier, the fees and such are higher with hard money lenders. But in a lot of cases, if you just kind of look at the very bottom there, the totals of both, the actual cash out of pocket can be significantly less in most cases. So, a traditional loan can allow you to kind of do it in one step. If you've got the cash and you're fine with tying it up in the property for a couple of years, they can they can come with a lot less in fees and lower interest rate. But then on the hard money side, you can then kind of take advantage of some of that equity that's there, when you go to refinance out of your hard money loan and into a long-term loan at that point. So it's just kind of a good breakdown here of just options that you have.
Yeah. So and just to like the highest interest rates and the amount of fees that you may pay at closing versus the overall project. You're in this property now at 44,240, where if your idea is that you're going to flip it, right, you've got less money into it than you would a traditional lender. Of course, a traditional lender may, if you try to flip it with a traditional lender, you might run into some issues there on lending requirements or whatnot. But if you're looking to burr it as well, you're here. If you've put $44,000, you've got $44,000 invested in this property, and if you've increased the value, 60 or let's just say 44,000 at bare minimum, you got a dollar for dollar exchange. When you do that cash out refinance, now you have $0 into the deal, right? And versus a traditional lender where you're going to sink a lot into the rehab. You're going to sink a lot into the rehab that you're going to have to come out of pocket. So now that we looked at the end result, I want to go back to the beginning, kind of walk you through a timeline of how this works with us. It's pretty similar, I think, with all hard money lenders. But here's kind of a borrower timeline. You come in and you say, hey, I want to work with you guys, or I want to need a hard money loan. You submit what we call a quick app. It takes about 5 minutes to kind of go through, gets the bare bones, demographic information about you and about the property. We'll look at it. Typically, that's going to result in a phone call from one of us. Typically Cody, actually, to have a conversation with you and kind of see what that looks like. And then we kind of move you to our application process, where we would extend a term sheet so everything that we're going to charge for closing and funding this project for you. And then we're going to give you an extra link to fill out the complete application and start uploading some required documents that we talked about earlier in the slide. So we also, in this application process area, we give our private lenders kind of first look, kind of first right of refusal to know. So very early in the process, we know if we're going to have somebody interested or not. Then we move you on to processing, right? Where we're going to be talking to title. You're going to introduce us to your title person, your insurance rep. This is where we're going to do that soft credit pull. And just as a reminder, soft credit pulls, they don't affect your credit score at all. We may order an appraisal. I'll put the asterisk next to appraisal because there are certain situations where we need to order an appraisal. And most of the loans we've done in the last year, we have not had to order an appraisal just because of the guidelines that we've created for ourselves, right? This processing piece is where we're going to also review the docs that you upload. We're going to take a look at your entity. And I think that's one important aspect I've missed to this point is most hard money lenders will only lend to an LLC or an entity of some sort, right? Not necessarily to an individual. There are cases where this does apply. We recently had to do one of those, but it's particular better to lend directly to an entity, right? And also in the processing, we're going to secure your lender. We're going to go ahead and get wiring information ready to set up for closing from your title. So our lender knows exactly where to send the money so that when you sign up for closing, you sign some paperwork, you hand over your portion of it, and then we move you to post-close. And post-close for us is very simple. We're going to set up some automatic ACH payments, so you never have to worry about getting a check in the mail or getting a check lost in the mail. We're going to set that up so it pulls directly from you. And then we're going to set up a payoff maturity date, and we're going to be touching base with you 90 days, 60 days, 30 days out before your maturity date just to see how your progress is going. Okay. What's the next slide? Okay, so here's the states that we lend in. So we actually, essentially, we lend in 33 states. I'm going to change this graphic up, guys. I don't like preferred state and optional states. Basically, what this means, preferred states, means that these are states that we, the three of us, have lent personally, or we've closed a loan in personally. The other optional states, we like. We just don't have experience in it. That's basically what that means between preferred and optional. But we can lend in all 33 of these states. There are a couple of others that we stay away from just because of their non-landlord friendliness or some other licensing issues that we don't have access to yet. Okay. Cody, we have here based on borrower strength. I know the answer to that question, but what does based on borrower strength actually mean? What does that look like?
Yeah. So, just kind of in general, hard money lenders, and it's really kind of the reason why their process is much simpler than traditional lenders. Hard money lenders are primarily lending on the property itself, and how good of a deal, the property itself is. Traditional lenders, want to ensure that you are personally capable of paying the loan back. It's not the case with hard money lenders, but we do have to be comfortable with your level of experience. And so if we're going into a new market, I mean, that's kind of what Jay is referencing in this slide here. Those optional states are states where we just, we don't have experience yet. And so for us to go into a new market, we've just got to be really, really excited about you as an operator, and your ability to kind of execute on what your game plan is. So, that's essentially what it means.
Yeah. Thank you, sir. Appreciate that. And that could be based on, and if you're sitting there thinking of, well, I don't have any experience, and Cody's talking just about experience, that doesn't necessarily happen to be the case. We also want to look at the amount of cash reserves you have, right? And so we had a person who she'd had zero experience. She was way off on her ARV, and she had zero liquid cash available to even close the deal, right? And so we politely told her no in the best New York fashion that Gwaith could muster up. But anyway,
yeah. One other example there too. Yeah, no, I should have. I could have worded that a little bit different. But yeah, so we've worked with some folks even in the mastermind that didn't have a ton of previous experience, but because we have a relationship with them, Jay's known them for the last year or 18 months, I think it was in one case. We knew what they had been working towards, we knew the steps they had taken to kind of get to the point where they were at to make their first offer, so if if there's a relationship there, and we can kind of get comfortable with, just kind of the overall picture, in any of that, combined with available cash, can definitely be substituted for experience. So, yeah,
Yeah,
there's
and
always
just
there's always a full story, kind of around every project. So, that can definitely weigh into it.
yeah, and if you're not used to working with hard money lenders before, one of the things that we really dive into is, okay, what's your exit strategy, right? Are you trying to flip this? Are you trying to burr it? Do you have a priority over one another? So as you're talking to hard money lenders, just make sure you have your story, as accurate as possible. And basically we're just looking to make sure you've thought it through, right? Like what's the primary, and then what's the backup plan in case the primary doesn't pan out. So again, based on borrower strength. Okay. So types of projects we fund. We love 1 to 4 unit properties. We love burrs and flips. We love commercial multifamily. As we kind of alluded, this entire presentation is that these are value add properties or opportunities that you're going to be looking at, right? Where you're adding in for a flip, or you're trying to do a cash out refinance. 6 to 9 months after you put considerable amount of work into a property. And so those are typically the types of projects that we fund, as well as other hard money lenders as well. That's the end of our presentation. I would love to open it up for Q&A. So if you guys have anything, now would be the time to ask. And while you're searching for that unmute button, I'm going to put a link here in the chat.
And Jay, I'm going to jump in. Xavier asked one earlier when we were on the comparison slide. If you put it in the chat.
Yeah. Great question, Xavier.
Yeah, the $5,000 start rehab. So with a hard money loan, the rehab is funded on an as completed basis. So meaning, you do need to have some cash available to get the rehab started. And then your hard money lender essentially comes in right behind you and reimburses you for what you've spent. So, if you've got a rehab of like $30,000, having 10 or 15,000 available to go ahead and get that rehab started. And then, like I said, the hard money lender would then just come in right behind you and reimburse you for that. And then you just kind of recycle that money again throughout the rehab process.
Yeah. So Xavier, it is initially out of pocket, but the idea, as Cody's explaining, is let's say you put a roof on for $5,000. You send us a picture of the completed roof along with the invoice or the payment from your to your roofer. Then you basically get refunded that $5,000, right? And that's one thing is we're a little different as well when it comes to draws. There was a conversation online here recently where a guy was talking about, hey, how do you guys use hard money loans without getting so beat up on construction draws? Can you guys hear me okay?
Yep.
Yeah.
Okay. And basically we do part of our fees, our upfront fees there that's mentioned in that slide includes all the construction draws that you're going to have to pay. The reason for that is we do limit it to, $5,000-$10,000 chunks. So we're not, because our lender basically has to pay a wiring fee every time there's a draw done. And we want to verify that we're doing, that you have done the work without having to send out a formal inspector that's going to cost a couple $100 every time you do it, unless you're in Gway's shoes and you got massive projects and it's
I was just about to jump in and say a couple $100 is good because I have traditional lending on a project right now, and the draw process compared to hard money is night and day. So we get hit up for $1,200 per draw. They have to send a inspector to inspect the work, and the turnaround time from requesting that draw to that draw being funded is typically 3 to 4 weeks, where here we're typically 2 to 3 days.
Yeah.
And it costs $325 a whack every time they come on site.
I get charged $1,200.
$1,200.
Yeah.
He's got a big project, Scott. Don't let him fool you. It's not a single family flip.
I get it. It's still crazy though.
Yeah.
And what I've run into is I've had people come to the site that have no concept of construction. They're retired something. And I'm trying to explain to them how things work and how much things cost, and handing them a bill from let's talk about the roofer. I mean, I just did one with a roof, and I had an $11,000 roof, and I said, look, here's the bill. I said, I'm not trying to gouge you, I'm not trying to hurt you, and what I ran into was, and it was a screw up on my part, was they had something called an SOW at the beginning. This is a hard money guy, hard money group. I'm sorry, a schedule of work, and I didn't detail that enough to what actually happened in the field. So I was getting killed on upfront paying, a lot of the contractors and waiting, 2, 3, 4 months until I got my money. Now they paid in, I don't know, let's say 10 days. Which isn't too bad, I suppose, but it was the schedule of work that got screwed up, and it was on me, frankly.
Yeah.
And they stuck to it, and I had to stick to it. I mean, I had to basically have the builders revolve around those 6 or 7 items that I put in at the beginning of the project, incorrectly, frankly. And I did want to ask one question. Why should I call W2 Cap for hard money and not the, I don't know, RF Capital or the 1,100 other guys?
Any others guys? That's a great question.
Because frankly, when I came here today, I didn't think I was going to see this. I didn't think I was going to see you guys are hard money lenders. I honestly didn't see that. I thought the guys were coming in from some outside to explain how hard money works compared to, which I understand, and frankly that's why I'm here, because am I still going to use hard money? Oh God, yeah, because it's a hell of a good strategy. It's a great strategy. If you need to close something fast, forget a bank. Yeah, you're 90 days out, baby.
I was, to answer your question, the biggest feedback that we get, and we've even had a couple of title companies brag on how easy our process is, how good we are at communicating, right? And so that's one of the things, and so we can I think it's probably best answered by people who've already used this, but just kind of summarize what we keep hearing is that's it, like that's all you need, like that's the whole process, like that's it. And one of the things that we're trying to do, Scott, is build relationships. I mean, if you go to our site, it's based on relationships and relationship building. We don't want to lend to just any schmo that's off the I'd say off the reservation, but off the street. And so we really want to get to know you, and we really want to get to understand what you're looking for, and just kind of understand. Now, we don't have specific parameters around that, but I can tell you, everyone, Cody Gwaith or myself, we know every one of our borrowers to a certain degree, right?
Well, Cody was talking about relationships, and in my opinion, of the 4 major currencies, relationships is far more important than money and time. You need the relationships to get the time and to get the money.
Yeah. And there are. Go ahead, Cody.
In a lot of cases, hard money lending, I've said it for a while, is sort of the current version of old school banking. Old school banking used to be you could walk into a bank with your business plan, sit down with the banker, and if the bank believed in you and believed in what you were doing, in a lot of cases, that's all it took to get the loan. I understand why there's all the regulations nowadays, and because a lot of them got burned. But I mean, that's what current current day hard money lending, especially in our case, is even within hard money lending, there's kind of two different groups, right? Like there's small hard money lenders, small to kind of medium sized companies where relationships can be built. And then there's some of the bigger groups that do offer hard money lending, but they've really kind of grown into something larger, and they're more institutionalized, and they start to kind of look more like traditional lenders. So yeah, for the smaller and medium sized companies, relationships are a really big deal, and it's the way that most of the deals get done. So yeah, that's kind of where we're at.
I'm friends with a couple of the Boston-based hard money guys that are trying to pull the term hard out of their titles. Let's stop the word hard. I mean, it scares people. I mean, it doesn't scare me. I think it might scare people that probably haven't seen what you guys just played, and don't know it. The guys that have never done it before.
Yeah.
Are the guys that get scared of it.
Yeah.
Once you learn or begin to learn the business, it's a great strategy, man. And I don't care what you call it. You need it. You need it. Just as we need private lenders all over the country. And frankly, you guys came up with the $45,000 or $44,000 that you needed down at closing. I just did one where I used all that, and that 44 grand, mine was, I think, 28 grand or something like that. And that was from a private lender that happened to live the town next door. And he's a registered investor. I mean, the guy's got $1 million that he does with these things. And I called him up and gave him all the details and gave him all the numbers. And he turned around and he says, "What do you need?" And I said, 28 grand. He said, "Consider it done. It was in my account."
There you go.
So, it's a game. Play the game.
Love it. It's good feedback, Scott. Xavier, you ask, is the 100% financing available in the preferred states only? No, it is not. Right now, that is really reserved, and we're actually kind of taken back a little bit about this just because our lenders are a little bit concerned about, and I'm using air quotes, looming recession, what's going to happen, whatnot. And so when we offer it, that is for folks we offer it in every state, but it's for folks who have done 5+ deals in the last 36 months. Right. Good question though. Anything else? Scott, where do you primarily invest? Where are you doing your deals?
The lower paragraph.
In the optional states?
New England.
Okay.
Although I just bid on one in Florida.
Okay.
It went full boat, and it wasn't for me. It wasn't my game. But
gotcha.
I am looking in South Fort Lauderdale, Boca, that kind of thing. Looking down there too. Yeah. Only because I've got boots on the ground. I've got friends down there. So
nice. All right, y'all. Well, if there's no other questions, Cody, Gwaith, you guys have anything else you want to share?
No, yeah. I mean, we appreciate everybody tuning in today. Appreciate the questions. Yeah, it's been good.
And Gwaith, we appreciate the echo.
That's why I keep myself on mute.
Xavier asked, how do we get in contact with you guys? So the best way, if you've got a project, is just to go to our website, w2capcapital.com. I'll put the link there in the chat for you, and you can start a quick app. It takes about 5 minutes to do. All right, y'all. Thanks for everybody being here. We'll see you soon.
Guys, thank you very much.
Thanks, everyone.
Absolutely. Have a good one.